You might ask yourself, what's an index fund? This is a mutual fund or exchange-traded fund. It's designed to follow specific set rules so that the fund can keep track of a specified basket of underlying investments. If you're looking for lucrative investments, the best index funds can help you build wealth by diversifying your portfolio and minimizing your fees. An index fund has a lesser risk than investing in individual stocks or bonds since index funds hold hundreds of securities. Index funds diversify your investment risk by holding stocks or bonds from various companies. Hello and welcome to today's video. We'll cover the lid and get to know what's all about index fund. That's not all. We'll also be looking at the top 10 long-term index fund investments that are worth the risk and earn our assurance that you will reap your fruits in time. Stay tuned and don't touch that dial. But before we can get to looking at these, let's get to know some little info about index funds. Index funds are passively managed, and this means that the fund's holdings are solely determined by the index it follows. An index fund's purpose is to replicate the performance of the underlying index. Because index funds are managed passively, they are more likely to outperform actively managed funds over time. Here's what's to know when picking an index fund. These are the key factors to consider. Target market segment. Some of these index funds monitor broad indexes like the S&P 500 to provide portfolio exposure to the whole U.S. stock market, while others track narrower indexes that focus on specific stock market sectors, industries, nations, or firm sizes. Your investment objectives. Some stock market indexes, and by extension index funds, follow firms with specific qualities such as significant growth potential, a track record of consistent dividend payments, or compliance with environmental, social, and governance criteria. 3. Expense ratio. The expense ratio of an index fund, the percentage of your investment paid to the index fund's manager as a management charge each year, can differ considerably. A reasonable expense ratio for a total stock market index fund is around 0.1% or less, and only a few index funds have 0% expense ratios. Expense ratios for more specialized index funds are typically higher. Minimum investment. Some mutual funds require $1,000 or more as a minimum investment. For the price of a single share, ETF index funds are available. ETFs are also available as fractional shares from several brokers, allowing you to invest as little as $1. Performance of benchmark tracking. The degree to which an index fund monitors its underlying index varies. The top index funds' returns are highly connected with their respective benchmark indices. Having seen that, let's get to know the top 10 index funds to invest in, especially if you are looking for a long-term investment. Number 10. The Fidelity Zero Large Cap Index Fund. This monitors an index of little over 500 large-cap equities in the United States, outperforms the S&P 500 index fund. However, because this fund is not an official S&P 500 index fund, it avoids paying S&P Global, the index's parent firm, costly licensing costs. The fund's benchmark is the Fidelity US Large Cap Index. In 2021, this index fund had a total return of 29.36%, slightly edging out the S&P 500's total return of about 31.46%. The zero in the fund's name indicates that the fund's expense ratio is 0%. The fund also has no minimum investment requirement, making it a fantastic choice for new investors. Number 9. Schwab SP 500 Index Fund. This index fund is about as low as it gets if you want to invest in an official S&P 500 index fund. With an expense ratio of 0.02%, you only spend 20 cents per year for every $1,000 invested. Because of the minimal investing charge, your returns are nearly comparable to those of the S&P 500. Year-to-date total returns for the fund in 2021 were practically comparable to those of the S&P 500 at 31.43%. You can launch your investment with as low as $1 because there is no minimum investment amount. Number 8. The Vanguard Growth ETF. The Vanguard Growth ETF is a good choice if you take on more investment risk in exchange for more significant returns. The ETF holds 265 large-cap growth equities in the United States. Tech companies make up 50.3% of the fund's holdings, followed by consumer discretionary equities 23.9% and industrial stocks 23.9% and 10.3%. Energy and utility stocks account for only 0.7% of the fund's value. Investing in Vanguard's Growth ETF could provide an opportunity to buy the dip, even though tech stocks have done poorly in the first 2 months of 2022. Number 7. SPDR S&P Dividend ETF. The SPDR S&P Dividend ETF is one of the leading index products for income investors. The S&P Dividend Index Aristocrats, which monitors 119 of the S&P Dividend ETF Composite 1,500 Index's highest dividend-yielding equities, serves as the benchmarks for the dividend-weighted fund. For almost 25 years, all ETF holding firms have grown their dividend payments annually. The fund's 12-month dividend yield is 2.72% as of March 15, 2022, which is much higher than the S&P 500's 1.41%. At 0.35%, the expense ratio is likewise slightly higher. Number 6. Shelton Nasdaq 100 Index Direct. The Shelton Nasdaq 100 Index Direct ETF invests in the Nasdaq 100's index's largest non-financial enterprises, which are essentially tech firms. Since its inception in 2000, this mutual fund has a good track record over the last 5 and 10 years. With a 0.5% expense ratio, it means that every $10,000 invested will cost you $50 per year. Number 5. Invesco QQQ Trust ETF. The Invesco QQQ Trust ETF is another index fund that tracks the performance of the Nasdaq 100 Index's top non-financial companies. This exchange-traded fund was founded in 1999 and is managed by Invesco, a global investment firm. According to Lipper, this fund is the best-performing large-cap fund as per total return over the 15 years through September 2021. The cost-to-income ratio is 0.20%, and this means that for every $10,000 invested, that will cost you $20 per year. Number 4. Schwab SP 500 Index Fund. With billions in assets, the Schwab SP 500 Index Fund isn't as big as the other funds on this list, but that's not a problem for investors. This mutual fund has been around since 1997 and is sponsored by Charles Schwab, one of the most well-known names in the industry. Schwab's dedication to offering solutions that benefit investors is reflected in the fund's ultra-low expense ratio of 0.02%. It's the fund's cost-to-income ratio. This means that investing $10,000 will cost you $2 each year. Number 3. Vanguard Total Stock Market ETF. The Vanguard Total Stock Market ETF, which virtually covers the entire universe of publicly traded stocks in the United States, is also available from Vanguard. Small, medium, and large firms from many industries make up the group. Since 2001, when it initially began trading, the fund has been around. Because Vanguard is the sponsor, you can expect low costs. 0.03% is the cost-to-income ratio. This is to say that for every $10,000 invested, you will pay $3 every year. Number 2. Vanguard Semiconductor ETF. The Vanguard Semiconductor ETF is suitable for thematic investors looking to profit from a long-term secular trend. The index fund is based on the MVIS US-listed Semiconductor 25 Index, covering 25 domestic and worldwide semiconductor and associated equipment businesses. It has $7.8 billion in assets and a 0.35% expense ratio. The Vanguard Semiconductor ETF is only suitable for investors with a lengthy time horizon and a high risk tolerance, as supply chain issues are projected to linger for some time. The fund was down more than 20% as of mid-March 2022, compared to around 10% for the S&P 500. However, with the semiconductor market expected to treble by 2030, long-term investors may find purchasing this index fund in a bear market a wise move. Number 1. Vanguard Russell 2000 ETF. For investors looking to take advantage of the potential upside of investing in small-cap firms, the Vanguard Russell 2000 ETF tracks the Russell 2000 in an excellent place to start. The fund invests in 2,073 small and mid-cap companies with a market valuation of $2.9 billion on average. The index fund's highest concentrations were in financials, healthcare, and industrials as of February 28, 2022. The fund's expense ratio is minimal at 0.1%, especially for a fund that invests in firms with the most significant growth potential. The Vanguard Russell 2000 ETF, like its benchmark index, underperformed the S&P 500 with a total return of nearly 16%. These are some of the top index funds on the market, providing investors with a low-cost opportunity to purchase a diverse range of stocks while still benefiting from diversification and lower risk. With such upsides, it's no surprise that these funds are among the most popular on the market. And that marks the end of today's video. Thanks for staying tuned. If you have something you would like us to talk about, leave it in the comment section and we'll get to it. Subscribe, like, and share the video. Till next time, bye-bye.